Hey, Eric here, and welcome back to my channel. So today, our main topic is really how to test your investing strategy without risk. This is a method better than paper trading, which is quite a popular method to test your strategy. And this is actually a foolproof method when it comes to testing a strategy, so no coding required. So I think when you're testing your strategy, a lot of people use paper trading and it's very time consuming, inefficient. So we're going to explore some alternative way to test your strategy as quickly as possible. So I'm Eric, and my mission is really to help people without financial background to earn 30% from the market each year. So if you want to learn more, you can go to 5minuteinvesting.com/free case study. Let's start this video. So first, why backtesting? Now, most people actually find ideas on the internet and use real money to invest without even testing the strategy itself. So that is actually very dangerous. So you want to make sure you're not one of the people that find ideas on the internet and use real money to invest without testing it first. And you need to prove your strategy before using any real money on it. And that's really because there are a lot of conflicting ideas, a lot of misinformation on the internet, and you don't want to be using your life savings on something that you haven't tested yourself, or at least somebody tested it before. And then finally, the method I'm going to teach you here, it's going to be better and faster than paper trading. So if you don't know how to code, this is probably your best alternative for now. So let's jump into how it works. So how do you backtest? Now, if you know how to code, then congratulations, you will have an easier time backtesting. And so the software I would recommend you to backtest is called FX Tester. So you just go here, you just go to Google, and then you can type Forex Tester. And then afterwards, you can find Forex Tester here, which is trading simulator for backtesting, so on and so forth. So then you can buy it, and then you can write a few lines of simple code, and then you can start your testing. And this allows you to go through 10 years of data in a matter of minutes, and it also allows you to test different currencies using the same strategy, and it allows you to apply the same concepts over and over again with great accuracy. So if you don't know how to code, then this video is really for you, and essentially you got to do it manually. So even if you're doing it manually, such as paper trading, I'm going to recommend a method that is better than paper trading. So that's what we are going to talk about. Now, when you're backtesting, here are some key considerations, and these are the KPIs you need to keep track of. Your win percentage, your loss percentage, so how often you're winning and losing, how much you're winning and losing in terms of dollar value, your frequency and transaction costs, and then you need to use 5 to 10 years of data, perhaps more, and make sure you test different industries as well. So let's pick a company. Now, when you're using a manual method of testing, the charting software you use doesn't really matter. For myself, I'm using tradingview.com. You can use it as well. And depending on your strategy, right now I actually hide all the indicators that I use most of the time, and you're going to end up with a chart. Now, for most people, depending on how much data you have, you can choose somewhere between 4 hour, 1 hour, 1 day, 45 minutes, 1 minute, or whatever. If you're a day trader, then you're going to be choosing a chart that is much shorter. If you are a medium-term trader, you're going to be choosing something between 1 to 4 hours. And if you're a long-term trader, then you're using between 1 day to 1 month. So for this example, I'm going to use Coca-Cola here. And you can see that there are years and years of data. And right now I'm at 2016. So I'm just going to go back a little bit further. So then I have a lot of data in front of me. So I'm going to go back. And you know that Coca-Cola has been around for a long time. So that is good because you're not going to run out of data that quickly. So let's say I'm going to go back all the way till 2006. I think that is pretty good time to start. To be honest, it doesn't really matter. But you need to start somewhere that have a lot of data. So then you have at least 10 years of data to work with. So then you can run through different situations over and over again. So in this case, you can start adding the indicators you like onto it. And once you start adding, I'm just going to show you something very, very simple. So let's say I'm adding MACD. Okay? So apparently I reached my indicator limit. No worries. I'm actually going to use a new chart layout instead of the one I'm currently using. Okay. So for that, okay. So I remove all the indicators that I currently have. So I'm going to add, a common indicator such as MACD. So in this case, once you add it, then you'll see the indicator down there. And for MACD, there are a couple of strategies. Basically, when it is up here, then you buy. When it is crossing over, down, then you sell. And then you buy, and then you sell. So then it's pretty straightforward. And then you just kind of follow the strategy. So this is a very common strategy that you can find on the internet. Of course, you can overlay this with a couple more indicators. So then you can develop a more precise or more complicated strategy. But the goal of this video is to walk through how to do it yourself. So right now, I'm at 2006 March. So then every time I press the right arrow, and you should be able to do it for your charting software, you can move one candle at a time. Now, if you're looking at too much data, you can actually go in here and zoom in, so then it's easier to see. So if you want to look at candlestick pattern, that can be done as well. And then you can see that right now, the candles are moving. Okay, and right now you actually see a crossover. Now, when you see a crossover, you can actually write this down yourself, which is April 11, 2006. So this is when you want to enter. Okay, and then afterwards, the stock is Coke. And then your entry price. Now, in this case, if you follow the signal, you would actually short the stock instead of buy it. So we'll go with that. And then you will set some sort of stop loss. So 43.91 is your entry price. And then you want to set your stop loss and your target profit. And this is going to be depending on your strategy. So in this case, I can do a very simple one. And there's actually a tool here within TradingView that can help you set this short position. So I can click here. And then now I can choose my stop loss. And it's going to be a little bit hard to see for now. Let me just get that fixed. Okay. And let's say I want to so right now you can see that I can choose my risk level, my entry price, and then you can also see my exit price, profit level. So in this case, I'm probably going to choose a dollar amount. Okay, so that's the account size. Because I'm just doing this manually, I don't need to worry about this. So my profit level is going to be, I think it's going to go down to 40. I'm just guessing. And then afterwards, I'm going to use the same amount for my entry price, which is going to be 43.93 plus 3.93. So that's 47.86. So you can see that this is a static stop loss and profit. And I'm going to click OK. So then now I'm able to track how the stock is going to go relative to my target profits and stop loss. And then obviously you can see right now is not going well, and then the crossover has went to the other side. So in this case, I can either wait or I'm gonna take a loss. So then for simplicity, let's assume I'm gonna take a loss here and I'm gonna exit at 46. So this is a short position. So then my gain and loss in terms of dollar is going to be negative. So then that means I lost 4%. So this is what you want to keep track of. And then my date of exit is here, which is April 21. Okay, so this is how you do your first backtest. Now I can actually go forward a little bit. Hopefully I can actually come back down here and then make it shorter. So then this is exactly when I exit. And then you can see that I lost money. So if I hover my mouse over here, then you can see that I lost money here. And then afterwards, I can continue to watch the market. Now you can see it turns out it's an uptrend, and this is Coca-Cola. So an uptrend is not that surprising. So this is what you want to keep track of, because now I can actually take a screenshot of this loss and then I can study it. And I can look at the indicator to see what I have done wrong. So now this time you can see that this is becoming an uptrend, and I'm going to start to look for an opportunity where I can buy, maybe when this crosses over. Now personally, I do not use MACD. I'm actually using this as a demonstration for you so then you can test your own strategy. So here you can see that's right now. It's almost crossing over. Okay, it's just crossing over right here. So that I'm going to apply this a long position. So the best thing about TradingView is really how easy it is to use. So I'm going to click right here. And then I'm going to bring my chart here. And then in this case, I'm going to set my stop loss to be below the previous candle, just for simplicity. So in this case, my price is 48.49 plus 46.59. 48.49 minus 46.59. So that's $1.9. So 48.49 plus $1.9, that's 50.39. So by looking at this, you can actually see that it is a risk to reward ratio of 1:1. And you can also use tick, which is cents instead of specific price. So in this case, if I choose 200 ticks, then it automatically adjusts for me as well. So you can use a 1:1 risk to reward ratio, which you see here, or you can change it to something like 2:1 risk to reward ratio. So again, when you're testing, you want to be more consistent in this case. So here I'm going to use a 2:1 risk to reward ratio just for the fun of it. And then we're going to start moving. So candle by candle, you can see right now it's going in my favor. And oh, it's kind of hovering. So you're just kind of letting the market do its thing. And you can't really see because you can see there's this little icon here, but I guess we can't control that part. And then we're going to keep going. And then, oh, it almost touched there. So in this case, I actually made a profit. And you can see that I exited right here on July 10th, 2006. So in this case, I entered May 25th, 2006. July 10th. Coke. And then my entry price this time is 48.46. And then my exit price this time is 52.54. So obviously you can see if you know how to code, you can actually code the criteria and then you can calculate and figure out the gain and loss a lot easier. So in this case, depending on how you want to calculate this column, you can assume you invest the same amounts each time so that there's no compounding, or you can assume there is compounding. So in this case, you can sum up your gain so they can figure out your total gain, and then you're going to repeat this. So right now, if I'm investing the same amount, assuming my position size doesn't change, which it will change because your balance fluctuates, you can see that right now I'm kind of positive 4% for the year. And then afterwards, okay, we're going to keep going and look for the next opportunity. Now, if your investing strategy actually relies on the MACD to cross over when to exit, I think that's okay as well, but you just can't set your target and stop loss. So you should at least set your stop loss or something that you have a risk management rule in place. So, okay. So for Coca-Cola, I think generally it is pretty strong and it has an uptrend. So I'm going to look for a buying opportunity. And right now you can see that it came back down and it is going down. And then you can see it's going to cross over soon. So I'm just waiting for the crossover now. And right there, the crossover. So again, I'm going to do another long. So you can see this is very mechanical, maybe even a bit boring. So in this case, I'm going to move one more. So then I can edit it here. So then in terms of stop loss, I actually want to put the stop loss around 55.11. Okay, so that's around 494 ticks. So I'm just going to round that up to 500 ticks. And then in this case, I want to double. You know, seems like a risk to reward ratio of 2-to-1 is working out for me. So I'm going to aim for a price of 70. And then I'm going to aim for a stop level of 50. Now again, this is relatively a simple strategy. I'm only using MACD, that's it. I'm kind of cherry picking the signal, so it's not very consistent. But when you're applying, you got to figure out exactly what your rules are, so then you can apply it on a consistent basis. But this is just to demonstrate how to backtest without using any coding at all. So here, okay, I'm entering at 30th of August. All right. And then afterwards, I start moving the chart. So you can see that I'm actually seeing the chart progressing live. And this is how you would backtest if you don't know how to code. If you know how to code, then you can obviously go through 10 years of data in a couple of minutes, and then it will tell you exactly where you entered and exit. So when I was testing 10 years ago, I was coding myself. And I tested like 300 strategies. So here you can see that, you know, it's going pretty well, and right now it's going up. And because right now for my rule, I'm really using a target profit and stop loss, I'm not looking at this anymore to exit. So I'm just going to keep waiting to see if it actually goes up. So it has been quite a while now, and we want to extend this. Okay. To see how we are doing, maybe it'll hit $70 soon. Taking a while. Maybe it wouldn't. Oh, okay. So in this case, we actually lost, and we're not able to take profits of 2-to-1 risk to reward ratio. So in this case, I entered at $60 right here. And then afterwards, I exited at $55. Okay, so in this case, my gain and loss is 8%. So now I'm down 5% again. And if I'm just trading Coke by itself, by now I'm only I'm actually at February 2007, February 27th, 2007. So you can see right now, after a year, almost a year of investing, I'm down 5% using this very simple MACD strategy. Okay, so now, ideally, you would use the same approach and then you would continue until you hit around 2020 right now. So then you can figure out your true gain over a long period of time. But in this case, usually what I do is after I test and figure out the strategy, whether it works or not, I'm going to change the parameters. So for example, right now you're looking at MACD, right? And then you can have fast length of 12, which is the shorter one, the red one, and a slow length of, actually, sorry, my bad. The fast one should be the blue one, and then the slow one is the 26, the red one. So you can actually change this, and I can actually change this into 50, actually 50 and 100. So let's see what happens there. Okay, so I think that kind of makes sense. It might be too much, so I'm just going to change it to 25 to 50. Now, as you can see, you can actually make this quite intense because you can try a lot of parameters, and that's really why coding helps a lot, because it allows you to go through so many parameters in a very short amount of time. Okay, all right. So right now, let me just backtrack a little bit. And I'm just going to delete this one for simplicity. And right now you can see that it has been going down, and right now there is a crossover. So this time I'm not going to worry about target profits. I'm actually going to look at the crossover as an exit. So I'm trying a different strategy now. So as you can see, I can test multiple strategy without even risking a single dollar. So here I'm going to assume I entered on this day, and then afterwards, whoops, where's my MACD? Okay, my MACD is gone. And I accidentally click forward. So as you can see, this can be a little bit frustrating, but no worries. We're going to go back to around 2007 February. Oh, where did my MACD go? All right, so I'm going to put my MACD back in. Oh, hey, it came back. Huh. Okay, I guess I kind of minimized it accidentally. So I'm going to take away this one. Yeah, okay. All right. So right now, we're going to cheat a little bit. And so right now you see a crossover right around here. So we're going to enter right around the crossover, which is on this day, which is December 10th, 2007. Oh, so I'm a couple months early. No worries. So then afterwards, I'm going to double click, and then you're going to see that I want to set my stop at the bottom here, which is $54. And this time, I'm not even going to set a target profit. Okay? So then, I'm going to drag that a little bit further. So this time, when I'm trading, I want to invest at $57 and exit when it is at a crossover. So in this case, it's going to be December 7, 2007. Okay, so I'm going to assume I'm starting here, and I'm going to keep going until it either hit my stop loss or crossover. So at this point, you can see that it is crossing over. So I'm going to exit at this point, which is 55.86. So in this case, you can see that I lost money. So I'm losing 2%. And my exit date, it's actually January 4th, 2008. Now, you can see this is a very popular strategy, right? MACD. And I'm still losing money with it. So now I'm going to take away this, or actually I'll keep it for now, and then I'll wait for the next crossover. Oh, so you can see there's another crossover now. So I'm going to try to enter here at $61. So this time I'm going to put my stop loss maybe around 56.5. Just kind of at the close of the bottom candle there. And then I'm going to, again, not set a profit level because I want to wait for the crossover. So here. Okay, you can see that there's a crossover now. And again, I made a loss of 58.83. So in this case, let me type it, fill this back out. So you can see that using crossover, I'm actually losing money. 60.79. Okay, and then this time, my entry date is actually January 23rd, 2008. So you can actually cheat a little bit because if you look at the year and you remember what happened in that year, then you can actually be more careful. But in this case, I'm going to assume I actually don't know what's happening that year. February 12th, 2008. Coke. All right, so again, you can see that I'm losing money using a crossover. So this is a crossover strategy. And this is really using a target profits and stop loss strategy. So you want to do this many times and across different industry and stock. So again, let me just take a look when it is crossing over. Oh, just right around now. So I'm just going to delete it so it looks less confusing. So I'm going to buy right here. And this is really what you want to do before you use real money, because as you can see, you can be wasting years here. This is already like 2 years without even making a significant profit. So that's why investing is so difficult, and that's why unless you have a lot of data to work with, it's very hard to succeed with investing. So here I'm going to use 300 ticks. That's kind of the bottom, the previous bottom. And again, I'm going to set a target profit of 0. So I'm just going to wait for the crossover. Oh, okay. So we can see that it just touched my stop loss. So I got stopped out in 2 days, 56.5. So that was quite fast. And then my entry price was 59.5. And then this time, my entry date was actually here, 11th of March, and this is March 17th. Okay, so here you can see that using a very simple MACD strategy is actually harder than most people think. It's not that easy. So again, this is a very simple addition of all the return to date. And of course, the actual return will be different depending on how much you are investing each time. But right now, I'm down 15%. Okay, so let's say I get emotional and I still think I'm right. You can see that it's still trying to go up. So now I'm going to invest again here. And I'm going to expand my stop loss a little bit. Okay, so I want to double click here. I'm going to invest at $60 and my stop loss is going to be at 55. So I'm not going to put such a tight stop. So I'm going to give myself more breathing room. And at this time, I'm going to wait for the market to go up. Oh, now it crosses over again. And using my rule, I would exit right here at another loss. So you can see what I was doing. I was a bit emotional, right? I didn't believe that I was wrong. I was thinking that the signal might be wrong. And turns out there was some sort of up rally. But then afterwards, when the signal was crossing over again, I lost money again. So in this case, for this signal, I actually lost 2 trades. And back then, 10 plus years ago when I was testing, this happened to me a lot using real money. And this is really when people get emotional and when they invest and they would try to double down or put more money in so that they make it back and then they end up losing more money. So in this case, I entered at $60. And then looking at the signal, I would exit here at 58.48. And then this time is Coke. And then the date is March 18th, and I exited at April 4th. So here you can see, now it has been 2 years. And if I am using the daily chart, which in this case I am, and I'm just looking for opportunities, I would have only 7 trades. And that is really a very small sample size because you want at least 30 trades to conclude whether you're profitable or not. But imagine you're using real money, and imagine you're waiting real time for this to happen, 2 years just to find out that you lose 17%. Now, obviously, I'm investing using Coke, which is a very strong company, and it has been dominating the market for many years, and I still lost 17% using an MACD strategy. So at this point, if you are doing this using paper trading, you're probably going to get frustrated. If you're using real money, you're probably going to be wondering why you're losing money, and then chances are you're not going to reach a significant enough sample size, and you're going to change your strategy again, which is not advised. So if you are doing this backtesting where you move it candle by candle, like how I teach you, then you will actually be in a much better position than a lot of people because you are able to figure out that it is not working. So, and you can see it. That it is not working and people lose money. And people lose money in the market all the time. So this is a really risk-free way of finding out. So if you haven't done any testing for your strategy, you want to make sure you do this whether you're trading copper, whether you're trading gold, whether you're trading, what else? Forex. Back then I used Forex and I tested a lot of strategies, actually over 300 strategies that I can find on Forex, and then I figure out a couple of very important concepts. So that is pretty much it for this video. And if you are a new viewer here, I would like to invite you to subscribe to my channel. I'm trying to grow my channel right now, and you can learn how to get 30% from the market from 5minuteinvesting.com/free case study. And if you are a recurring subscriber, thank you for your support so far. And you can really learn how to set up your charts and find stocks at a discount in the link below, which is 5minuteinvesting.com/free chart course. So in the next video, I actually planned another topic that is quite interesting. And this is actually a news article I saw earlier on the internet. And it is about a guy who posted on Facebook, "My whole portfolio is gone. What can I buy with $8? You think I can build it up from $8? I turned 400 to 9,000 a while ago. This should be fun." And this guy is laughing. And I'll share this screenshot with you in the next video. And I'll talk about, why he lost money. Like if you're in this kind of position, what are you going to do? What you should do? And how do you move forward from there? So that is going to be a pretty interesting video. And thank you for your support. And I'll see you in the next one.